Hello everyone, and welcome to our yet another discussion on manufacturing accounts. This is our very first lecture that is going to handle the accounts of a manufacturing concern. So we shall have a number of things to introduce here. And of course, you should be having the manufacturing account concern on your screens right now. This is our lecture number 1, and of course in this lecture we are going to look at a number of things. We are going to look at the manufacturing concern. We are going to first of all understand what is the manufacturing concern. We are going to look at the income statement of a manufacturing concern. Then we shall look at the format of the manufacturing account. And then we shall move into the discussion of prime costs. So basically this is going to form our discussion today on the manufacturing accounts. So moving into the lecture, we begin by understanding what is a manufacturing concern. And here we are saying, who is a manufacturing concern? We are asking that question, who is a manufacturing concern? And in the bullet, we are saying that a manufacturing concern is an enterprise that employs labor and machinery to convert materials into finished goods. Manufacturing concern is an enterprise that employs labor and machinery to convert materials into finished goods. So we continue by saying that, for example, the furniture manufacturer converts wood and other materials into furniture after applying some kind of labor. So this person will use some kind of raw materials, which is the wood, including other chemicals, and then he will proceed to manufacture furniture by applying some kind of labor. Okay, so we continue to answer this question, who is the manufacturing concern? And we are saying that the manufacturing concern is different from the trading concern, mainly because the trading concern purchases merchandise that is ready for sale without additional processing. So this one will set the difference between the manufacturing and the trading concern. We are saying here that the manufacturing concern is very different from the trading concern, because for them, they simply manufacture the goods and then they sell the finished goods that have been manufactured in-house. On the other hand, the trading concern will simply purchase. The trading concern will simply purchase is ready what has already been manufactured by the others or by the manufacturing concern, and then they will proceed to sell without making any additional processing. So that is the difference between the trading and the manufacturing concern. So you continue the bullet by saying that, for example, a furniture dealer purchases furniture from the manufacturer and sells it to customers without additional processing. So in that case, the furniture dealer is regarded as a trading concern rather than a manufacturing concern, because in this case we are seeing that we will simply purchase the furniture from the manufacturer and then we'll proceed to sell it to the customers without doing any further processing. So that sets the boundary between the manufacturing concern and the trading concern. So the question here is that, how does the income statement of a manufacturing concern look like? How does the income statement of a manufacturing concern look like? We proceed in the slide by saying that the income statement, that is to say the statement of profit or loss and other comprehensive income of a manufacturing concern, is made up of 3 major parts. The income statement, or what we are calling the statement of profit or loss and other comprehensive income of a manufacturing concern, is mainly made up of 3 major parts. And here we have the first part, which is the manufacturing part or the manufacturing account. Then we have the trading part, which is the trading account. And then we have the profit or loss part, which is the profit or loss account. So these are the major parts that make up the income statement of the manufacturing concern. So our discussion is going to move into what all these parts are made up of, or the looking at the major elements that make up the different parts of the manufacturing income statement. So we proceed by looking at, first of all, the manufacturing account, which is actually the major discussion in this lecture. We want to know what does the manufacturing account we want to know what is made up of the manufacturing account. What are those different elements that are presented in the manufacturing account? So we first of all look at the different elements here, and we are saying the manufacturing account is debited with the production cost of goods completed during the accounting period, and it contains the following costs. So here in the opening remarks, we are saying, here in the opening discussion, we are saying that the manufacturing account is debited, okay, is debited with the production costs of goods completed. The costs that have been incurred on the production of these goods that are completed are debited to the manufacturing account. And of course, the costs include the direct cost of those materials that you have used to manufacture the product, the labor effort that has been used in the manufacturing process, and the direct expenses that have been incurred during the manufacturing process. So these are direct in nature, and of course we are going to see the definition of a direct cost, and in that definition we have already mentioned that it is the cost that can be traced to the product. So we are saying that we debit the manufacturing account with the direct material costs, with the direct labor costs, and the direct expenses. However, we don't end at these three. As you can see on our slide here, we also debit the manufacturing account with the factory overhead expenses. Now, I'm bringing these ones last because they are indirect and cannot be traced to the product that is being manufactured. So they become overheads, and of course, there is supposed to be a way or criteria under which the firm will recognize them. There's supposed to be a criteria through which the firm is going to recognize these on the manufacturing account. So it means that in total, the manufacturing account will capture the cost of direct materials, the cost of direct labor, the cost of direct expenses, and the factory overhead expenses allocated following a specific basis. So these are the major elements that make up the manufacturing account. All right, so we continue by saying that when completed, the manufacturing account will show the total production cost. When completed, the manufacturing account will show the total production cost. So this figure will be transferred down to what we call the trading account. And of course, as we have seen in the previous slide, we have seen that the trading account is part of the income statement of the manufacturing concern. So the figure that we are going to get here is then transferred down to the trading account, and then of course we shall see how the trading account looks like. So you continue by saying that where the company's policy allows the factory to include a percentage markup or the market profit on the production cost of goods transferred, then the figure transferred down to the trading account will include the factory markup or the market profit. Okay, we are saying that where the company's policy allows the factory to include the percentage markup or the market profit on the production cost of goods manufactured, then the figure transferred down to the trading account will include the factory markup or the market profit. So of course we shall see this in our activity. Next, to move into the format of the manufacturing account. And of course, I'm going to present my format on a separate sheet here. So this is my sheet where I'm going to present the format for the manufacturing account. And of course, as we have done before, we give our account a title. So this one I'm calling it Tile Manufacturers Limited Manufacturing Account for the year ended 31st of December 2019. So this is a very, very nice title for us here. So of course we present the elements of the manufacturing account in some rows and columns. So we can have that kind of draft, okay? We can have that kind of draft. And of course we shall show the figures in shillings. And of course you may need to show the precision, your level of precision. And these are our shillings in thousands. So the manufacturing account begins by recognizing the opening stock of raw materials, okay, begins by recognizing the opening stock of raw materials. First of all, before I even present this, you need to understand that the manufacturing account is debited with the cost of materials. Okay, expect materials to come here, expect labor to come here. Okay, and then expect the direct expenses to also come here, what we are going to see in our future discussion as the total prime cost. So in this account, expect the materials, labor, and the direct expenses to come here. And on top of that, there's what we call the factory, what we have called the factory overheads. The factory overheads are also going to be included on this manufacturing account. So as I've indicated here, our manufacturing account will begin by recognizing the raw materials. But of course, you know, these raw materials are consumed over a period of more than 1 year. So we shall have some opening stock of raw materials. Okay, so recognize that first. So you put the figure right there. Recognize the opening stock of raw materials first. Then you add any purchases of raw materials that you have made in the period. Okay, you add any purchases. So that is the figure here. Okay, the purchases of raw materials. Then you proceed to also recognize the carriage inwards of these raw materials. The carriage inwards is capitalized as part of the cost of the raw material purchases. So this one is also brought into our manufacturing account. Okay, then the total that you get of these three, the total that you get for the opening stock of raw materials, the purchases of raw materials, and the carriage inwards that you get, okay, we are going to deduct the closing raw materials. Okay, you bring in the closing raw materials, that one is you're going to deduct. And maybe for those who may not know, the carriage inwards is going to be added. Okay, we add. So we deduct the closing raw materials so that we can get the total amount of the raw materials consumed in the period. Okay, we get the total cost of raw materials consumed in the period. So that accounts for the direct materials. Okay, so that is the reconciliation for the materials. That accounts for the materials. So next, I bring in the labor. Okay, because as I mentioned that the manufacturing account is debited with the direct labor costs, so I bring in the direct wages or the labor. Okay, that one I'm adding it onto the materials. There's nothing much on the labor. It is an outright figure, so you just bring in the direct labor there. So you cannot talk of opening balance of labor, then purchase. No. That one we don't do it like that. So there's nothing like opening balance of labor. No, that one we don't have. So you simply add the labor that has been, of course, you bring in the labor that has been incurred in the period. You add it to our materials. And then, of course, as I've mentioned, the direct expenses are also going to be debited on this manufacturing account. So you bring in the direct expenses. Now, of course, as we are going to see in our definition, all of these are when you add them up, you get what we call the prime you get what we call the prime costs. Okay, so the figure that we get of these three, the materials, labor, and the direct expenses, is what we are going to call the prime costs, and that's going to be our figure right there. So we proceed to now recognize the overheads, those costs that are not direct, okay, but have been incurred in the production facility, and those are what we call the factory overheads. Okay, so recognize the factory overheads and bring them to our manufacturing account, and these are going to be added to the prime. These are going to be added to the prime costs. So the figure that we get will be the cost of our completed goods in the factory, or what we are calling here the factory cost. So that's going to be our factory cost, and as you have seen, it is made up of the prime cost and the factory overheads. So at the end of the day, of course, we have some work in progress. We have some work in progress that is completed within the period. So we add the opening work in progress. Okay, the opening work in progress. Work in progress are the goods that are in the process of being completed. Okay, you may find that in the year 2018, maybe there were some goods that did not get completed, and they were completed in the year 2019. So those ones are brought forward and recognized in the year 2019. Okay, they are brought forward and recognized in the year 2019. So you bring the opening work in progress. Okay, so the total that you get here when you add the factory cost with the opening work in progress, when you add the opening work in progress, the factory cost, the total that you get, you now deduct or you less the closing work in progress. Those are the goods that you were intending to complete in this financial year, but we are not completed in this financial year. So those ones are deducted from the total of the factory cost and the opening work in progress to give us the production cost of goods that have been completed. Okay, to give us the production cost of goods that have been completed. So all in all, this is the direct cost that has been incurred on the goods that have been completed within the financial year. So the production cost of goods completed is presented in the manufacturing account for the period. And of course, as we have mentioned in the discussion, if there is some kind of divisional performance measurement arrangement in the organization, then you find that some entities may allow a markup to be added so that we can know how much profit has been made by the manufacturing division. So, of course, that one we shall see in our activity. So we proceed to look at the other items that I had intended to present here in this discussion, and of course, those include the key terms that we have seen in the foregoing discussion. So in the key terms, we have the direct costs, and of course, here in the bullet, we are saying that direct costs are costs that can be traced to the item being manufactured. Those are the costs that can be traced to the item being manufactured. And then, of course, these include the direct cost of materials, as we have seen, the direct cost of labor, and the direct expenses. Now, all in all, we are saying that the direct costs are known as the prime. These costs altogether are known as the prime costs. Okay, they are known as the prime costs. So, what we mean is that when you get the cost of direct materials and get the total cost of labor, if you add on the direct expenses, what you're going to get are what we call the prime costs. Now, of course, as we have seen, again on the manufacturing account, we have seen that the overheads or the costs that cannot be traced to the product are also brought into the manufacturing account. So we further look at the indirect costs, and here we are saying that the indirect costs are those costs that cannot be traced to the item being manufactured and hence will be indicated in the factory overhead expenses. So whenever you meet the word overhead, you just know that those are the costs that cannot be traced, or the costs that are not direct, or the costs that cannot be traced to the product. So, all in all, some of them are not discussed or are not brought into the manufacturing account. So, for the purpose of this discussion, we are only concentrating on the factory overhead expenses. But it doesn't mean that it is only the factory overhead expenses that are indirect. There are many others that fall in this category. For example, here we are saying that administration expenses, together with selling and distribution expenses, fall in the category of indirect costs. So for now, we have only recognized the factory overhead expenses. Okay, we have only recognized the factory overhead expenses in the manufacturing account, and of course, we are going to see where these two indirect costs are going to be recognized. So for now, that is the discussion on the manufacturing account. So you can still go back to your accounts and pick up lecture number 2, which moves into the format of the trading account.